What's up, good people? Here is a weekly recap for the week of September 18th to September 22nd, 2023, which is this previous week. Now, unfortunately for that week, we had a minor loss of minus 0.87% about then. And you can find in the link down below the spreadsheet that tracks all of these returns that I'm talking about. So for Monday, September 18th, we took one trade and we had a loss of minus 0.75%. On Tuesday, we took two trades and we had both of the trades lost. We had a combined loss of minus 1.125. And then on Wednesday, we didn't have any official trades. On Thursday, we didn't have any official trades. On Friday, one of the trades that we sent out in the previous month of August hit full TP for a gain of 1%. So that, brought us out of the hole that we were in from the trades from Monday and Tuesday. But due to the amazing risk to reward ratio that we use and due to the proper money management that we use, you can see the loss for that week is just minuscule compared to the previous week when we'd had 4 back-to-back winning trades of 1.5% each. So with a proper strategy, with a proper plan, you only need to win a few times and then you can get back the losses you've maybe accrued, and then you get back even more and you're still in profit. So overall, for the month of September, we are overall in profit. Now, before I leave the next clip to play that goes over me going over all the trades that we took in the previous week and the strategies behind it and analyzing them and seeing how we can improve going forward, I wanted to mention something to you guys. Now, during this weekend, I was thinking to myself, this whole journey of mine in trading. So keep in mind, I've been trading this is my third year. And I've been thinking of, okay, what are some of the things that I can improve on? And comparing, so before I started trading, in the years before I was starting to trade, or I started trading, I was more into the stock market and investing, so like a long-term investor. And looking back, some of the financial gains I've had over time are more related to the decisions I made when I was younger to invest in the stock market and all. And one of the critical factors was my skill set of planning. So the reason I'm talking about this is lately I've been thinking, okay, mostly like for me, trading is more of a hobby, not like a full-time gig and all, but due to the profitability that I have been able to develop while trading, I was thinking to myself, I'm like, okay, when I was in the investment game, in the stock market game, I used to analyze a lot of companies. And that's going to be another video for another day, because that right there, that is a lot of content. Let me give you guys like a sneak peek. So I saw Tesla when it was $50 per share. You can look up how much Tesla is worth today. And I saw Apple when it was at $20 a share. And this was like in 2015. That's going to be another video for another day. But that, this whole financial game for me, I just didn't start it the other day. But anyway, the key thing here is that some of these decisions that I had made when I was younger, the result, the positive gain from them was due to planning. So I've been I sat down this weekend and I was like, what do I really want to achieve from this trading game? And I realized that throughout this whole 3 years, I never really had a concrete plan. Part of it is, and I would compare to other trading, I don't want to teachers, gurus, whatever, out there. A good amount of them have trading as their full-time gig. For me, trading, I just told you guys, it's more of a hobby for me. So for me, if I don't make any money from trading, I still have other sources of income, right? So I think I never really went all in the trading game. So, this weekend I sat down and I was actually honest to myself. Where do I want this? I already know the returns or the gains can be infinite. So I was like, okay, if I can keep going at it and the result is only as good as I am as a trader, and knowing that I value and trust in myself when I put my mind to something, it's like, why not see how big or how heavy or how far I can go in this trading game if I went all in? Not to say, I've been putting in hours when I do back testing and all. I've been putting in hours, but I mean like financial resources, like putting my money where my mouth is, literally. So I came down with a plan. So I know my goal in the next 6 months, in the next 1 year, in the next 5 years. So right now I'm thinking of trading in a more long term. So I have a long-term goal of the trading game. But this is what I wanted to instill in you guys before we get to that recap video. Sit down and write a plan. If you've seen the potential of trading, be honest with yourself, because what that will do is that, and I think this is also part of the growth as a trader, because I was telling my community just the other day, is that every day, and I've been doing it because I just told them that like a week and a half ago. So I tell them every day when you wake up, ask yourself, what kind of a trader would you be if you followed all of your strategies, all of your rules? So this means you're only taking trades that are based off of your strategy. So you're not FOMOing into a trade, you're not forging into a trade, you're not over leveraging, you're not risking your account. So if you literally followed all of your rules, what kind of a trader would you become? And what that allowed me, even practicing, I mean, I've always known that subconsciously, but when you consciously, like before you hit buy or sell in a trade, and you're like, if trading was my full-time gig and I was doing this, before I buy and sell, wouldn't you, if you were doing it as a full-time gig and you know that you need to pay your rent, you need to pay your car note at the end of the month, wouldn't you be more disciplined in your trading? And the answer is yes. So why then would I be taking trades just for the sake of taking trades? So this is where the plan comes in. So every morning, ask yourself, if this was my full-time gig, if I followed each and every one of my strategies, what kind of a trader would you be? And the answer to that is that you would find that you are an amazing trader. You, beyond everything else, you are an amazing trader. The only little mishaps is because of over leveraging, FOMOing into trades. And once you take that out of the picture, you will see how lucrative, how far you can go in this game. And so that's the kind of mentality that I have right now. That's, and tying that to the plan that I made for 6 months, the next 1 year, I think it will be a big game changer, and I want you to join me in that journey. And with the experience I've had, I know I'm only 3 years in, but I found that if you keep rectifying your mistakes, so you identify what's causing you to fail in trading and you keep rectifying it, man, there's levels to this thing mentally, because you keep growing, you keep seeing things in a different perspective. You're not sidetracked by other things that may happen in your life or by some of the losses that you may take. But anyway, I will make another video down the line talking about my journey investing. Before that was way before I started trading. But anyway, in the meantime, you guys, here is the weekly recap of Monday, September 18th through Friday, September 22nd. I will catch you guys in the next video. Peace. What's up beautiful people? So today, the day is Friday, September 22nd. It is currently 1:40 p.m. and I'm doing the weekly recaps of the trades we took this week. So unfortunately, I wasn't able to do a recap after each day. Sometimes life be lifing. But this week, we have a negative return of minus 0.875 because on Monday, we took one loss for minus 0.75. On Tuesday, we took 2 losses for the trades that we took for minus 1.125%. Wednesday, we didn't take any trades. Thursday, we did not take any trades. Friday, today, we didn't take any trades. However, you can see we have a 1% win, and this is from a trade we sent out like 2 weeks ago, and we'll go over it. So that brings the weekly total to minus 0.875. So as I always say, you need a nice risk to reward ratio for your trades. you need proper risk management, because if you have that, it doesn't matter whether you have like 5 losses in a row, because here, even if you're to take off the 1% trade that hit full TP today after 2 weeks or after 3 or so weeks, the loss might have been like minus 1.875. So comparing that to, for example, you see when we had 4 back-to-back winning days here, that whole minus 1.875 can be taken out by like just 1.5 days of winning trades, or just 1.5 winning trades. So this is the importance of having that nice risk to reward strategy always, or risk to reward ratio. Always sticking to your strategies. Do not trade if you do not have to trade. Also, because what that can do to you, it can bring back terrible trading mentalities, FOMO, 4G, over leveraging, and all of that. You know, I'm reminded of that song by Kenny Rogers, The Gambler, right? You better know when to hold and when to fold. So in trading, you better know when to trade and not to trade. So let's kick off and see, go over the trade that we lost on Monday. So this was a gold trade. I think I've marked it up here. It was on the hourly time frame. So of course you can see here, I'm going all the way back because I'm doing this reviews in hindsight, or after the fact, because I wasn't able to do this review this day. But what we'll do here is that we will apply this bar replay tool and see what we're looking for. So to me, and heads up, for me, I consider this trade like an A setup for me, and I'll tell you guys why I considered it an A setup. So first of all, here what I was looking at a possible triple top. So we can see a top here, another top here, and a possible triple top. So the trade does, or the market did not have to go all the way up here, but it was a possible triple top. But anyway, here my bias for gold this whole week has been bearish. So that's the first thing, because if you look here at the biases, my bias for gold has been bearish the whole week. EU has been bearish the whole week. Dollar has been bullish the whole week. For US 30, I just changed this bias to bearish when this daily candle closed below this live SAR yesterday. But for US 30, before yesterday or before today, my bias was bullish. Now here for the gold trade, you can see we had a double SAR zone on the hourly time frame. So here, what entry was I expecting here? I was expecting a break and continuation. So I was expecting two consecutive 1 hour candles to close below here. So the first candle closed, so that's the break candle. Then the next candle, it also closed below there. And you can see what I liked about this trade and why I'm saying to me it was an A setup based off of the strategies that I have. Look at this whole wick to the top. The wicks will always tell you a story right there. So it tells me that we have a bunch of sellers there. So for me, this was break, continuation, and this was an amazing trade because in my mind, I always want to enter with my entry next to the SARs I'm trading so that it can allow me to have stop losses well above those SARs. So in this instance, I sent out this trade. I think it was on the live. I don't know if it was on the live session or I sent it out maybe. Oh, wait. So I sent it out right here. You can see selling gold now with 0.75% risk. So, and 60 pips TP, 30 pips stop loss. And you can see we were in that trade. It actually went immediately into profit. But unfortunately, the volume came back up and stopped us out. So unfortunately it took like a minus 0.75% loss. The other thing with this week, we had heavy news. We had, what was it? We had on Wednesday, which was yesterday. No, not yesterday. 2 days ago, we had FOMC. You see this FOMC press conference and also FOMC like federal funds rate. So this is pretty much one of the heavy news events during the month. So there's FOMC, there's NFP, and then there's CPI. Those are heavy news events. And during these times in the market or those weeks in the market, markets don't really move how you expect them to move. So they move kind of weird. So that was one thing I think that contributed to some of these losses that we took. But anyway, so that was the minus 0.75 you guys can see here on Monday. So gold kept going and you can see kept pumping up. So you normally expect manipulation during those such weeks, but you can see eventually gold came back and dropped after that news event on Monday, if I'm not wrong. You know what, let me just go to the end or just close this out. You can see based off of where our entry is, gold did come back down, but anyway, we got stopped out and that was it. So that was that trade for Monday, minus 0.75. Now on Tuesday, we also took a loss, unfortunately, for minus 1.125%. So the first trade we took a loss on, and this was being manipulated out of the market. So there was this US 30 trade right here. So by then, my bias for US 30 was bullish. So ignore this sales right here. My bias by then was bullish. Right now, my bias is bearish on US 30. Now here, we had a double SAR on the 15-minute time frame. So based off of the entry, that gave a test and rejection. So you can see this first candle tested and failed to close that below that buy SAR, double buy SAR zone. And then you had the rejection candle. So you see this wick all the way up. And another thing, if we use our markups indicators, you can see here we had a daily bullish zone. So we had a daily bullish order block, daily bullish high, daily bullish low. So we had a bullish order block, and it's a daily order block which rarely comes up. So I was pretty confident in that trade as well. But the other thing to remember around this order blocks, like daily order blocks, monthly order blocks, that don't come up as often, you normally have manipulation in the market. So we got that test and rejection. The entry was valid, and then I went ahead and sent this. I don't know if this was on the live session. Let's see. Maybe I sent it out here. No, I actually sent it out here. So this trade, buying US 30 now is 0.75% risk and 100 pip TP, 50 pip stop loss. So what happened here? They actually came back because there was a daily bullish high here, daily bullish low here. They came down here and manipulated us out of the position. So we got stopped out, but look at what happened. And I can replay that. So that was the entry. And if you replay what happened next, right, came back to fake us out, took us out of the position, and got, price came all the way back down. Now for me, as much as I did take the loss on that, I went back in the trade, but I said I wasn't going to count that as an official trade because remember, I don't send every trade that I take to the group. Also, I don't want folks to over leverage and all of that. So if we had already taken a 0.75% loss, I didn't want to send out another trade just in case, just got to be safe because there's always going to be trades out there. Plus for me, I know how to recover easily if I take a loss. So sometimes when I'm not trading on the live session or not even the trades I send, I may take more trades than I send in the group, and sometimes I may increase my risk a bit higher. So of course, I want to also be safe and consider the different kinds of traders that are out there or in our community. But anyway, you can see got manipulated. If I turn on those markups again, you'll see came faked out on the daily bullish low and price went all the way back up. Now in future, I think for this trade, if we ever get a trade that's around a daily bullish zone, even if it validates, I think going forward, it's better to wait for price to retrace to, in this case, would have been probably better to wait for price to come to this daily bullish low area and then drop down to the 1 minute and 5 minute time frames and try to trade the live SAR zone. So as much as the trade validated up here and as much as our stop loss was below the SARs we're trading, I think in future, if we have like daily order blocks, monthly order blocks, or sometimes even 4-hour order blocks, it's better to wait for that manipulation to end, and then we drop down to the 1 minute and 5 minute, and then we try and catch the trade that way. So if we had waited, which is what I did personally to get back the loss that I took, after this loss I dropped down to the 5 minute time frame, and there was a 5 minute live SAR here, so I waited for a break and continuation. I entered that trade and it went into full TP. But anyway, so that at that point was minus 0.75%, and then so you can see when that trade hit stop loss, and then right, price went all the way, literally all the way back up. So that was that loss, the first loss on Tuesday. The next loss on Tuesday was on EU. So this was the entry right here. So here on EU, and I'll go ahead and replay this as well. Let's see. Okay, there it is. So here on EU on this day, so same day, Tuesday, September 19th. So there was this zone right here, double SAR zone. And this double SAR zone, there's something that happened here. So price broke above and then came back down. So this was going to offer a break and continuation entry. So if I go here, so this candle broke that double SAR zone. So this was a continuation candle. So we have two consecutive candles closing below there. And so for me here, this was a good entry given also the SARs are above that. But for this trade, I really wanted to hop in somewhere around here. I wanted this candle to close pretty close to the SAR. So what I told the team, and I remember this was on the live session, I told them that for this trade, instead of entering with 0.75% risk, let's enter with half of that. So half of 0.75 is 0.375. So I told them enter is 0.375, and in case the trade retraces, you can enter with the remaining 0.375. So we entered with it, and the trade actually went immediately into TP. And actually for this trade, the rest of the night, but keep in mind this was Tuesday, and then we had that heavy news on Wednesday. So the day before heavy news like NFP, CPI, FOMC, you normally have ranging in the market, and especially if you try to trade an FX pair, price, volatility or volume might just die down quite heavily. So here you can see we were in profit. I was waiting to get to that because this was 25 pips stop loss, 50 pips TP. So I was waiting to get to that 1:1 in order to set break even, but we really never got to that part. So you can see price just started ranging and then kept coming back up. So for me, I held this trade because it was only 0.375% risk. And you can see we unfortunately got, and when price was coming back down here, I wanted it to come back to around break even, and I let folks know to just close up because by this time it was already Wednesday, right when we are expecting FOMC in some hours, but unfortunately just got taken out. And you can see like when FOMC happened, that's the FOMC volume you just saw right there. So this was again manipulation, and when FOMC happened, you can literally see what. So we were, for all these trades, we were in the same direction, right? Our direction was good. You can see US 30 got manipulated out of it. EU got manipulated out of it. Even gold got manipulated out of it. So it's just a matter of that timing. So definitely also going forward. So we talked about if we have like a daily order block or monthly or 4-hour order block, to probably wait for a retest of the full order block even after an entry validates, and then go down to the 1 minute and 5 minute and find an entry there. So those are some of the improvements that I can see. Also during heavy news weeks like CPI, NFP, especially FOMC, that's what I'll say, especially FOMC, the one with the news conference, because we have two types of FOMCs. There's the one that occurs like at 2 p.m. on a Wednesday and doesn't have a conference, and then there's the one that still occurs at a 2 p.m. on Wednesday and then has like a news conference 30 minutes later where the Fed Chair Powell makes his statement. So that's the one I'm normally more concerned about. I'm not normally concerned about the one that doesn't have a conference. So also going forward, especially FOMC week, maybe use half risk or just find a way to avoid manipulation or just not trade at all. But you can see for all these trades, our mindset, our direction, our bias was on point. We just got manipulated. But that's what trading is. You have wins and you have losses. The key thing is to make sure that your wins, the percentage of your wins, the net percentage is always positive, so that you have more wins, you have more returns. But Wait. So there's that trade that hit TP today on Friday for 1%. So this particular trade, I had sent it out. If I go to the Forex Majors channel, I had sent this trade out on August 23rd at 10:54 a.m. Eastern Standard Time. So I'd mentioned if GBP NZD closes with a sell signal based off of the reversal indicators, that will be a sell entry with 350 pips, stop loss 700 pips, TP, and 0.5% risk. So this is the time when I still used to risk 0.5% per trade. Nowadays I risk like 0.75 per trade. So this was the trade there, and this was based off of our reversal indicator. So we have a bunch of indicators. We have the crosses indicator, we have the breakout indicator, breakout scanner, we have the reversal indicator, we have the high-low plus trend indicator, we have the what else? I think I'm missing one. Probably not. I think those are the main indicators that we have. So for this trade, if I go back, this was the trade here, and I can replay it on this day. So that's when I sent it, and stop loss here was 350. TP was 700 pips. So that was the trade right there. And I'd mentioned, of course, for all my trades, once you achieve a 1:1, you go ahead and set break even. So if I keep replaying this, started off, was just stuck in and out of profit, then some drawdown, and then finally GBP and ZD decided to go down. At this point, we're already at a 1:1 risk to reward. So I went and told folks to secure, set break even, and secure some profit if they wanted. And you can see this trade just hit full TP today. So you can see here during the journey, I kept giving updates on the trade. GBP trade is 300 pips in profit, 50 more pips, and you can set break even. So that was on September 18th at 11:11 a.m. And then September 19th, 8:09 a.m. I said trade achieved a 1:1 risk to reward and is running 430 pips in profit. Set break even and take partials if you want. So that was that trade right there. And today at 8:05 a.m. you can see GBP NZD hit full TP for a 1% gain. So that's where that 1% in here comes from. So hopefully that made sense. I still today this week was an amazing week. As again, remember, for me it's always learning. If you know me, you know I don't really focus on the money. So long as my percentages make sense, I know the money is behind those percentages, and I think we're still in the right trajectory and looking forward to the next week. So I will catch you guys next week. Have an amazing weekend. Happy trading if you're still in any trades today, and during the weekend make sure you recap your trades, and hopefully you guys enjoyed this recaps. If you have any questions, feel free to let me know. All right guys, peace.